Canada adding more than 66,000 jobs in October, and the unemployment rate dropped to 6.9%. Lindsay Biscaya mentioned this earlier. We did see a positive reaction initially anyway in the Canadian dollar, which has been struggling this year against the US dollar, and no wonder given the trade war that the White House has launched. We have this open economy. Quite a spike there. Often currencies rise when you get strong economic news because it makes it less likely the country's central bank will cut interest rates. And lower interest rates tend to drag down a currency because you just get less money if you deposit money in that country. A lot of the gains, though, in October were driven by part-time positions in industries such as wholesale and retail trade, also warehousing and transport. Let's get more from Andrew Hencic, Director and Senior Economist at TD. Andrew, thanks very much for joining us. Really appreciate it. I know it's just 1 month and these numbers are notoriously volatile, but what jumped out for you with these employment figures?
Well, for us, it's got to be the decline in the unemployment rate. Most expectations were for something at least steady, if not rising. So for the unemployment rate to drop by 0.2 is a pretty surprising development.
The unemployment, of course, famously a lagging indicator. I know you don't want to get into theory here, but is that a thing, the unemployment rate, that the Bank of Canada pays a lot of attention to when it's trying to predict what the economy will do?
Well, it's something they're going to keep an eye on, specifically because they're concerned about the slack in the economy and how much inflation offset is coming from that slack. So, it did come down 0.2, but it's still 6.9%, which is an elevated level. It still indicates that there's slack in the labor market. The conditions still aren't great. They're just a little bit better than we thought they might be.
How would you characterize the economy in terms of job prospects? Because we know that businesses, and you can hardly blame them, are reluctant to invest without knowing what the tariff wall is going to be like. So is job creation generally strong?
I think strong is it's probably too strong of a word.
Yes.
From our lens, obviously uncertainty is still high. To your point, businesses are likely to be hesitant to invest, given that they don't know what kind of operating environment they're going to be looking at, 3 months from now, 6 months from now, a year from now. One good report doesn't make a new trend. Mm-hmm. From our lens, we're looking for sub-trend growth through 2026. The government has unveiled new measures, hoping to, in their most recent budget, hoping to, stimulate a little bit more growth with a larger deficit and an emphasis on public investment. Nonetheless, this is still a challenging environment, mm-hmm. And so, the prospects there are still relatively tepid.
Charles St. Arnaud at Alberta Central is quoted as saying that we saw pretty strong job creation in things like retail or wholesale transportation that had been seeing losses. So to some extent, I wonder, is this a rebound because of the coming holiday season, or do they try to factor that stuff out?
So any seasonal things like holiday season hiring should be factored out in the seasonal adjustment statistics Canada makes. But, to that point, it was the job gains were concentrated in only a few sectors, and they were overwhelmingly on the part-time side. Many sectors continued to see job losses or very little gains, so there wasn't a whole lot of breadth in the report, mm-hmm. which is another indication that things aren't necessarily all that healthy at this moment. But again, take a step back, 6.9% unemployment rate. That's still quite high. It's not necessarily a signal of a robust market, and it's 1 month of data. We'll see. Mm-hmm. We'll see what the next month holds. Even though this was nice to see, let's try and take it 1 month at a time here.
And the annual wage growth for permanent employees rising to 4%, and apparently that's faster than the economists had expected. I guess that suggests that some employers are anxious to hold on to people.
Yeah, we'll still need to dig through the numbers a little bit more, but that is a healthy print and stronger than expected. You know, Something to keep in mind when examining what kind of price pressures might flow through. But again, it's a totality of the measures. With the unemployment rate still high, this could be indicative of some underlying pressures in some industries. But we'll again one step at a time. The data in the report can be noisy at times. We still view the economy as having quite a bit of slack, and it's still going to take a little bit more time to ramp up. Again, there was also the data on the on average hourly earnings of all employees, and those were in and around 3.5% year on year, so a little bit lower than the permanent measure.
And the youth unemployment rate north of 14%, and obviously socially damaging if so many young people can't get into the job market.
Yeah, really tough times out there for young people. It's hard to enter the labor force and start building those career prospects. It's not good. Simply put, that's not good. Bringing that measure down, as the labor market gradually recovers and folks are absorbed back in, things will turn around for younger people. We expect a little bit of a cap on how high the unemployment rate can go, given that population growth for next year and potentially into 2027 will be relatively subdued. So growth in the labor force will limit the upside on the unemployment rate, and some of those folks will be able to be absorbed just through that channel. But yeah, you can't downplay it. Tough times out there for young people in the country.
And finally, the participation rate, often economists say that's a sign of health in an economy. Of course, I guess you could debate it. Should couples be able to raise a family with just one person working? But I guess that's history. It doesn't happen anymore in a lot of countries. But how is the participation rate right now?
Yeah, so from our lens, we were looking for a little bit for stabilization in the participation rate. Last month we had 70-odd thousand people added to the labor force. So this month another 17,000. It remains to be seen because, again, as I mentioned, with the decline in population growth that we expect heading into next year, the gains in the labor force should be relatively small. Now, the question is, are we going to be drawing people in off the sidelines? Probably not as much, given that given what we foresee from the economy. But and our hope would be a relatively stable outlook for the participation rate. So not necessarily any more gains, but also not many more, not a drop in the labor force, not substantial drops in the labor force participation rate going forward.
We better leave it there. Thanks very much indeed for joining us, Andrew. Andrew Hencic is Director and Senior Economist at TD.